Hello, welcome to EBC TV. My name is James, and on today's show, I am joined by the magnificent Monty from Corico. Monty, how are you?
The magnificent. I like that.
Magnificent Monty from Corico.
Thank you.
So I tell you why I call you magnificent.
Go on.
Because I've tried really hard to get into the good books of Martin Lewis and be on his TV show.
Oh, right.
You actually are on his TV show.
I have been, yeah.
Yeah. So when he does a mortgage session,
yeah.
So when Martin Lewis does a mortgage session, or when he does any session, he's on camera, he's got his sidekick, and then he's got his expert sitting on the high stools on the left.
Yeah.
You're on the high stools as an expert. And when he talks about mortgages, he comes to you, doesn't he?
I know. It's amazing, isn't it?
That is amazing.
Yeah. He's very good. He's very gracious. He's got the brain the size of a planet. So he knows all the answers anyway.
Yeah.
But he just likes to use the experts, and it's great. I really enjoy it.
There you go. So if you're watching EBC TV and you're thinking, who are these mortgage experts they've got on there? They're not only any mortgage experts, they're the mortgage experts that are on the Martin Lewis TV show. So rock and roll. So we're very lucky to have you on here. Tell me about what you do and tell me about how you got into mortgages.
So I'm the CEO of Corico Mortgage Brokers. We're a mortgage broker, national mortgage broker, but mainly based in London. And we got into it just to try and do something different because everyone hid behind suits and ties and overcomplicated everything. Yeah. And we thought there's a better way of doing this. We want to talk to people as people, really, and demystify the whole mortgage process. And getting into mortgages, do you know what? No one gets into the mortgage industry. Like, they don't wake up one day and think, do you know what? I really want to be a mortgage broker. And so our industry is a weird and wonderful, brilliant industry made up of people who actually, first of all, wanted to do something very different. Yeah. So I always wanted to be in, surprise, PR, marketing, TV, radio, etc.
And also a rock star.
And a rock star, of course, but I was not good enough or good looking enough to do that.
We've both got that in common, by the way. We've both given it a go and still giving it a go.
Ooh, rock and roll. Yeah. So I sort of fell into mortgages and started in 1994, a long time ago. Yeah. And once you in this industry, you can never leave because it's such a... People are so nice, and actually I love the buzz of helping people, etc. So it's a really nice industry to be in, and people, if you're looking for a job, looking for a new industry, the mortgage industry is so nice, so welcoming, and you can really build a really good career quite quickly.
I really love that idea that you are driven by the idea of helping people. It feels like you're a brother from a different mother, you and I. We're part of the same stuff. I love that. So I'm predominantly a pensions expert. I do a lot of other stuff now. But I tripped into pensions. It's like, I tripped over. What have I fallen into? I'm in pensions. And I started doing the exams. And before you know it, you've done so many exams and you've done it for so long. There's so much in your brain. You can't leave. Yeah. So 36 years in and I'm still doing it. So you're 31 years in. I'm 36.
Yeah.
No, hang on a minute. You started this in 1994. So you're 31 years
31,
in.
yeah.
I'm 30. I'm in my 36th year.
Yeah.
Ridiculous. Right, let's talk about mortgages. Okay.
All right.
So we've got some Corico content on our EBC TV website already. And we filmed with your amazing colleague Stu.
He is amazing.
A couple of times. He's not here today, but Stu, we're missing you. But obviously we've got Monty. So
I'm a downgrade.
He's the main man. So we got you today, and we were reviewing some of the stuff Stu had said, and we said we always ask Stu what's going on in mortgages right now. And so this is going to be a brilliant moment for us to update that because mortgages never stand still, do they?
No.
So Monty, what's going on with mortgages right now?
Well, it's actually been a really interesting time, James, because what we've seen now is it's not just about the fact that rates have fallen or they've gone up, etc. So there's a lot of competition in the market, which is good. Lenders want to lend. That's the first thing. But what we have seen for the first time in a long time is some innovation creeping back into the mortgage industry. So we've got lenders, for example, who are new lenders who have come in from Holland, the Dutch lender called April, for example, and they will do long-term fixed rate mortgages. So they'll do mortgages fixed for 10, 15, 20 years, and they'll do something a little bit different. Normally, when you take a 10-year fix, for example, you're tied in for that period. But with this lender, you're not. So if you can make unlimited overpayments, if you take an 80% loan to value mortgage and as you pay off the mortgage, it goes down, then the rate switches onto a lower rate.
That's
so there's
incredible.
Different things like that. And because it's long term, they can lend up to 7 times your income.
So they're called April. I'd never heard of them before, so this is brilliant. They're called April. They allow you to borrow more and they allow you to extend it, and it's a bit more flexible.
Yeah.
What's not to like about that? Is that going to completely change the market in the UK?
I think it's starting to change how people think about long-term fixes, because long-term fixes have never taken off in the UK.
Yeah.
In Europe and America, they're normal.
Yeah.
In the UK, they're not. So it's something interesting. It's a bit different, and it's something that it's another thing that we have in our armoury.
Yeah, because a load of people fixed for 5 years when rates were low.
Yeah.
And I've always got my fixing timing wrong. My whole life I've got it wrong. Fixed for 2 years when it was really low, fixed for 5 years when it was really high, and got it wrong all the time. And I was with a mate of mine recently, he said, I fixed mine for 10 years at 1 point something.
Yeah, I wish I'd have done that as well.
I was like, I wanted to punch him, to be honest, because I was like, why wasn't I not that lucky?
Yeah.
Why didn't I think of doing that? Because I'm actually quite financially switched on, but I didn't.
Yeah.
Right, so window cleaners and windows, they often have the dirtiest windows in the street. I have got my pension sorted. I'm sure your mortgage is sorted, but sometimes there are things tangential to what I do financially that I just haven't thought of properly.
Exactly.
So I love that idea.
Yeah.
So are you seeing more people go for longer term mortgages now to try and
I think
fix
we're starting to see more interest in it, and that's allied to the fact, in terms of other innovation, we're starting to see 100% mortgages come back.
Yeah.
So someone like Skipton, for example, Building Society, they introduced 100% mortgage. We've now had other lenders joining them in that 100% mortgage offering. So for the first time in a long time, first-time buyers can now get a mortgage and they can buy a property without having to put a deposit down.
Do you pay a higher rate as a first?
You do pay a higher rate.
Okay, so So we're going to talk about Mythbusters. There is I don't know whether it's a myth or otherwise, but is it true that if you put a chunky deposit down, you get a better rate?
Yeah. So the best products are if you're lucky enough to have a 40% deposit.
40.
Okay. So you're therefore borrowing 60% loan to value.
Okay.
So that's how that's worked out. So if you've got 40% deposit or 40% equity, that's where you see the best buys in the paper or online. Yeah. The best buys are always at 40%.
How are people doing that, Monty? Is this Bank of Mum and Dad kicking in here, do you think?
So much is Bank of Mum and Dad, absolutely.
Right, okay.
Or increasingly Bank of Gran and Grandad now as well.
Okay.
So a lot of people in the Southeast have money from family, and that's how they put their deposits in. And that's what's so good about the 100% mortgages. Actually, some people don't like them, but actually the problem with the Bank of Mum and Dad is it becomes a gap between the haves and the have-nots.
Yeah.
If you're lucky enough to have family who can go, well, actually, do you know what? Here you go. Here's 50 grand. Here's 100 grand. Then brilliant.
Yeah.
But there are an awful lot of people who don't.
Yeah.
And so that's where these 95%, 100% mortgages come in, and they can really help people on the property ladder.
Back in the day when I was younger, I even heard someone get 105% loan to value.
Yeah, you could get 120.
120?
Yeah.
That's when everyone thought house prices would just keep going up and up and up.
Yeah. The concept was interesting. It was Northern Rock. So there's a lot of...
Who went bust.
Who went bust.
Yeah.
But that's not the reason they went bust.
No.
Because the concept was, if they're lending people 100%, what were people doing? They're moving into their property, then they're putting on their credit card to pay for decoration, new sofas, fixtures and fittings, etc. So Northern Rock just thought, well, instead of them doing high interest rates on their credit cards, why don't we just lend them at the same rate what they're going to borrow anyway?
It's a really
so the concept was good.
Yeah.
The problem is very complex in terms of Northern Rock would just basically they had a certain way of doing things, and when the security markets stopped, they couldn't trade, basically.
Okay, so let's get into current rates, because when Stu was on the programme maybe 18 months ago, he said, I think we're at the peak, folks, and it's coming down. And then when he came on 6 months later, he came in and said, sorry about that. That didn't happen. So do you think we are heading back to some lower rates for people to have some comfort with?
So we're at a period of time now where hopefully I think we're at a much more stable period.
Yeah.
So we did see high rates, and then we've seen rates come down. So you can now get 5-year fixes and 2-year fixes under 4%.
Right.
So starting with a 3.
Okay.
Maybe 3.85, 3.89, 3.75 on a 2-year fix, for example. The problem is twofold, and the Bank of England, who set the interest rates of the country, they have an issue in that on the one hand you've got inflation, which is still sticky.
Yeah.
You've got potentially war in the Middle East again, which might push up oil prices again. So they're a little bit worried on that. On the other hand, you've got an economy which is not, it's a bit stuttering, isn't it? You're starting to see unemployment tick up a little bit.
Yeah.
So on the one hand, they need to keep rates high, but on the other hand, they need to cut rates. So there's a bit of an impasse at the moment. And the latest Bank of England decision from the Monetary Policy Committee was a bit of a stalemate. So they decided not to change.
Yeah.
So I think what that translates into, I think interest rates are going to be higher for longer. So previously we thought there'd be 4, maybe even 5 cuts this year.
Yeah.
But now we think there might only be 1 more, maybe 2.
0.25% each time.
Quarter of a percent each time.
Okay.
So 3.75 on a 2-year fix, we might get down to 3.5 by the end of the year, but I don't think it will be that dramatic. So there's an awful lot of people waiting, going, interest rates are going to fall, I'm going to wait.
Yeah.
And actually they've been disappointed. And every time there's a bit of a crisis or Mr. Trump tweets something that affects the markets and interest rates go up again.
Yeah, and people are Trump anxious, terrified. That's my latest
Terrified.
joke. Terrified.
I love
That's
that.
Brilliant, isn't it? You're very welcome to use that. By the way, every time the Monetary Policy Committee gets together, Monty does a little piece to camera on LinkedIn. So you need to follow Monty. And if you're wondering what his name is, it's Andrew Montlake from Corico. So Monty, I love your little updates, and I always watch them and like them. So thank you for that. I get a sense that in the UK, we're settling back down to almost an acceptance that it's never really going to be 1% and 2% again on mortgages. It's going to be
correct.
3, 3.5, 4, somewhere in that space.
Yeah.
Which, to be fair, before the global financial crisis, that was where we were all kind of settled in anyway. So there's been a decade and more of people being used to getting mortgage rates below 2%. But I don't think we're going to be there again for any time soon. Maybe a generation. Who knows? Is that what you're feeling?
Yeah, 100%. I think people, the last 10, 12 years were the aberration.
Yeah.
The norm is interest rates of around about 3.5 to 5%.
Yeah.
That's the norm.
Yeah. Okay.
And the credit crisis in 2008, 2009 put us into this decade of ultra low interest rates, which were that's not the norm.
Yeah.
So unless there's another crisis, and we hope there isn't, unless there is, we're back to that normality I was talking about earlier. So where Bank of England base rate should be between 3 and 5%, and that's sort of and that's quite a big difference. But I think at the moment Bank of England base rate is 4.25. It might go down to 3.5, and I think that's sort of normal.
It's about right.
Yeah, it's about right.
So if I was about to go through remortgaging, my own personal experience is I was sat on a 5. The 5 ran out at the worst time. You guys helped me, which was brilliant. They helped me personally, so they were brilliant. You guys helped me. I then sat in on another 2. I went for 2 rather than 5 because I thought, it's bound to get better. I'll just stick with 2.
Yeah.
And then when that comes up again in April 27, I don't know what I'll do then. I'll have another think then. But if I was going through the remortgage process again now and I was thinking, what's going to happen with the interest rates? What advice would you give to people who are remortgaging right now?
Yeah, so we always take advice very personally in terms of what that personal situation is. And it depends a lot about what you think about what interest rates are going to be and your capacity to absorb slightly higher rates, or actually do you definitely need something low? So you've got to remember a fixed rate is, to all intents and purposes, it's an insurance policy.
Yeah.
So if you're someone who's going to, lie awake at night worrying, are interest rates going up or interest rates going down before every Bank of England decision, and your budget is quite fixed, then actually a 5-year fix now, especially if you can get it at around the 3.8, 3.9% is probably a really good option.
Yeah.
But if you genuinely think that actually, do you know what, my life might change in 2-3 years, I might change jobs, I might have a family, I might move, I might do this, that, then actually maybe a 2-year fix or even a tracker rate with no penalties, if you really believe interest rates are going to fall and you can afford that risk that if they go up, you can afford it, is another decision. So basically, there's no right. People think there's a right or wrong.
Yeah.
I should take a 2-year fix now. I should take a 5-year fix. The answer is do what's right for you, and use a trusted advisor to work out what is best for you at that circumstance. And then don't look back in anger.
No, I love that song, by the way. I love that song. I knew we'd get a song reference in here. Don't look back in anger.
Love a bit of Oasis.
All of those people who've got the Oasis tickets. I saw them in Nebworth whenever it was in '96. So, and when they were good, and he could still sing.
I'm looking forward to it personally.
Brilliant. So, what's more prevalent right now, fixed rates or trackers? Are trackers coming back?
Yeah, trackers are coming back in vogue because there is a general belief that over time interest rates are going to fall.
Okay.
But you do have to be sure that they could go the other way.
Yeah.
And we have seen, I mean, let's take the Liz Truss debacle.
Yeah, boo for Liz Truss. Liz Truss, boo.
Yeah, and I can't talk about it for long because I get very angry. But that was a good example of something coming out the blue that suddenly meant interest rates shot up.
Yeah.
And if you're on a tracker, that would have hurt.
Yeah,
definitely.
Would have done, absolutely.
So it's all about do you want that security? But they are coming back more in vogue because more people do think actually we're in a more stable period. Love or loathe Labour and their policies, it does seem to be a stable government.
Yeah.
And that stability and a bit of boring politics is what we need.
Yeah. Yeah, we're a bit donkey-esque, aren't we? We do like it to be a stable environment. That's terrible.
I don't know why I laughed at that.
That's terrible.
One.
That's literally terrible.
I know.
Someone will cut that out. Okay, so we are very much people. Where does AI, where does where does technology come into the future of people and mortgage broking? What do you reckon?
It's a massive discussion in our industry at the moment. And look, we've been hearing for the last 20 years that mortgage brokers are going to be replaced by robots.
Yeah.
And that never comes to pass. So for us, it's all about people want to use people powered by technology.
Yeah.
People don't just want to use technology. And if you're taking out the biggest loan you're ever going to take out, interestingly, if you speak to lenders who have a tech process, they have 100% of people will engage first of all, but the dropout rate is massive.
Really?
Enormous.
Really? Because
at the end of the day, before you press that button without taking any advice, you just want someone to give a check on it. You want to speak to a person who goes, do you know what? Actually, should I be taking this 2 or 5 year fix? Is there a better option out there? And people don't actually want to go all the way through end to end without at least speaking to someone who can either guide them or ratify the decision that they think they're about to make.
That is fascinating because we, in the pensions and financial wellbeing side, we have talked about robo and technology-driven decision making, and we had an example where a lot of people going into the top of the funnel. Top of the funnel was very wide, and like 10 steps before you actually choose your investment portfolio, and the dropout rate at step 9 was massive. Because people didn't want to press the final yes, I'm going to do that, because they hadn't spoken to a human.
Correct.
Okay, that's fascinating.
So for us, it's all about how can we get tech and AI to do the heavy lifting? How can we make the administrative process around it
that's got to be
much easier? The home buying process in the UK is rubbish.
Yes.
It is slow. It is antiquated.
Yeah.
The mortgage process in the middle is actually really quick.
Yeah.
It's actually quite good. But the whole end-to-end process of buying a home. So there's lots of moves to digitalise the home buying process
Yeah.
as a whole, and that's what we need to concentrate on.
And you guys at Corico, as part of One Dome, have got all of that in motion, really, bringing quite a lot of the processes in-house to make them smoother and quicker.
Yeah, the whole ethos behind One Dome, which is a company who's recently acquired us, is to make that home buying process easier. So, for example, they have a system where the broker, the estate agent, and the solicitor can all talk in real time together.
Yeah. So
actually, everyone's on the same page, and that just alone speeds up the process.
Massively speeds it up. I mean, you know, who'd have thought that actually people speaking to each other in one platform would make things quicker?
I know, exactly.
Brilliant. Okay, getting close to the end of our little chat here. So, anything that so we talked about global events already, and we know that there's stuff going on in the world, and we know that tarified activity can see things moving. I'm always interested to hear any top tips you've got for anyone right now. So I was going to ask you two things. Firstly, are there any urban myths or myth-busting statements that are just worthy of sharing with everybody? Are there things that people think about mortgages that are actually not true?
Yeah, I mean, the first one is really obvious. You can get a mortgage.
Yeah.
Lenders do want to lend. I still get into a taxi now, and they say, "What do you do, mate?" And I say, "Well, I'm a mortgage broker." And they go, "Oh, you can't get one of those, can you now?"
Yeah.
And I'm like, no.
Well, you can.
You really can.
You really can.
People want to lend. Lenders want to lend. And there's now loads of choice. There's now more innovation out there. The second myth is you need a big deposit.
Yeah.
You have to have, everyone says, oh, you can't buy a house without 20% deposit. Nonsense.
Okay.
You can do it now on 100% mortgage. If you've got 5% deposit, you can borrow more than you think. And also, the biggest one probably is use a broker. Now, I'm a mortgage broker, shocker, I would say.
Yeah,
that.
I mean, shocker. Yeah, newsflash, mortgage broker says need to use a mortgage broker. But I agree, by the way, because I've just used these guys and they're great.
And also, if you go to an estate agent, there's also a myth that you have to use the estate agent's broker.
Yeah.
No, you don't.
Yeah.
Legally, you do not have to use the estate agent's mortgage broker. Make sure you shop around, speak to a broker who speaks your language and understands what you want to do and that you get on with. There are so many good brokers out there, not just us. There are loads of them.
Yeah.
So try and find someone, spend some time and get some advice before you go out shopping for a mortgage, for a property.
Yeah.
And then you know that you're in a good position and you can actually afford the property you fall in love with.
Well, I'm delighted to say that we have such a strong relationship with Corico that if our corporate employees, part of the workforce for some of our corporate clients, reach out to you guys, then you waive your broker fee anyway.
Yeah, that's right.
So that is brilliant news. Brilliant news for everybody wishing to explore using a broker outside of the one that their estate agent is nudging them towards.
Yeah, we love, like you guys, we love what you do, and we love that financial education. And actually, proving that mortgage broking isn't rocket science. You don't have to think that, look at a mortgage and go, oh my God, that's so complicated.
So we've done 2 or 3 myth busters there. What about if I said to you now, what would your top 2 or 3 tips be for someone who is a first-time buyer?
Well, first of all is obviously get advice.
Yeah.
Definitely don't try and do it without getting advice.
Yeah.
That's the first obvious tip, because that's really important. That can save you, and I'm not making it up, it can save you thousands of pounds over the term of a mortgage. The second top tip is make sure that your credit file is in order.
Yeah.
So there's a lot of reasons to check your credit report, and you can go on Equifax, Experian, etc., and just have a look at your credit file. And don't worry if your credit score is a little bit low. There are little things you can do. Make sure that you're on the electoral roll.
Yeah.
Make sure, obviously, all your bills are paid on time.
Yeah.
If you haven't got a credit card, potentially you could get a credit card.
Take one out, pay it off in full every month.
Pay it off.
Lewis would say that.
Set up a direct debit to make sure you do. And that just builds up your credit rating as well. And sadly, there is a lot of fraud around, and people don't know they've been defrauded sometimes. Actually, only if you look at your credit report can you find that.
That is fascinating that you said that, because I once had a credit mark on my score because of a Vodafone or the other mobile phone suppliers make this mistake as well, by the way. Just going to name Vodafone, because Vodafone had a debit against my name for someone that was at an address that I used to live at that had defaulted on paying back.
Yeah, that's quite common.
And even though it wasn't me, it was my address that was on the file.
Yeah.
And so I had to talk to them and get it removed.
Yeah.
So interestingly, we talk about getting your credit score checked a lot. And one of the other advice points that we make is just because you're in a free credit check site, don't get sucked into using the products that they're promoting, because you just go in there to sort out your credit score and then come out again and do whatever else it was you're going to do. Because before you know it, you've spent so much time on their site that you suddenly take out a loan or a credit card with them when there are better deals to be had by going to our friend Martin Lewis. He's more your friend because he's had you on his show. I've invited myself onto his show. I'm yet to hear. Okay, so any other tips for anyone mortgaging right now, not a first-time buyer, but anyone going through a remortgage process right now? Any final tips for them?
Yeah, I mean, if you're remortgaging, the first thing to say is, don't panic around. A lot of people now are coming off lower rates and going into a slightly higher rate environment. There are lots of things you can do to basically work out that if you're worried that your mortgage payments are going to go up, say £500-600 a month, actually speaking to an advisor, there are things that can be done that mean that doesn't happen. Rates are often a little bit cheaper than you think. There are things you can do, like you can extend the term of your mortgage. You could look at a part interest only, part repayment. There are lots of little tricks we can do to help mitigate that rate rise, and start early. Don't wait. So we normally speak to all of our clients 6 months before their rate expires, and we can fix them into a rate there and then. And then what we do is monitor the market.
So if it improves, you can...
So if it improves, we can switch you onto a better rate.
Now that explains. So someone once said to me that if you go for a rate in December, they're quite often keen. They quite often have deals in December because it's the end of the year and they're trying to get their numbers up.
Yeah, there are different times. I mean, the summer sizzler season is almost upon us, where lenders come out with those because it's a bit quieter. But yeah, it depends from lender to lender. Different lenders have different year ends, for example. So Nationwide's year end is different to everyone else. So their time, when they're suddenly thinking, actually, do you know what, let's get last burst of business, might see their rates come down.
So when's their year end?
I think it's the end of April, actually.
Okay.
Sorry if that's wrong, Nationwide, but I know it's different.
Obviously, your very friendly broker expert will make sure that you're right on the money for that sort of thing.
Yeah, correct.
Good stuff. Thank you so much for being on the show.
It's been a pleasure. Thanks for having me.
Thank you for enriching my morning by talking about mortgages, and thank you for enriching EBC TV's mortgage section, because we've now got an up-to-date expert view. So, Monty, thank you very much for that.
Thank you for having me.
Shake your hand without banging the microphones.